Hey traders, welcome back to another video. If you guys are brand new, my name is Akil Stokes. I am an investor, a Forex trader, a trading coach, and one of the co-founders at tier1trading.com. And this is a weekly video that I do showing you what's on my radar for the week to come. So taking a little bit of a stroll around the market and showing you what's on my watch list. If you guys are brand new, before we get started, do me a favor, hit that subscribe button, make sure that notification bell is clicked as well. That way you don't miss any of my content. And of course, if you guys are returners, thank you for the support. Do me a favor, hit that like button, share this video, and as the video goes on, leave a comment below. We actually just surpassed the 45,000 subscriber mark on this channel, and that's a big thank you to you guys for that. And when I shared that announcement on social media, I got an interesting message from a trader saying, it wasn't a negative message, but it said, Akil, you spend too much time in the beginning of these videos talking about other stuff aside from trading, and get right into the point, show me the charts. And it actually inspired me to write an article on Medium, you can check it out, called Why I Scare Traders Away, right? And this is a tactic that we purposely do for a few reasons. One, I'm very prideful about who we have watching and subscribe to this channel. It's not just a channel that I want to grow as many subscribers as possible and invite trolls and whatnot. We take pride, just like on the Tier 1 platform, in having a very specific tribe of traders, ones that are in general more serious than your average trader out there. And because of that, it creates a community sense. And if you even just read through the comment section, it creates some really good back and forth that is helpful for traders of all levels. So typically when you spend time like I'm doing now talking, it scares the people away that are just looking for that quick fix, and it holds the people that really are true about trading. Now, most of the time, these rants are also on trading psychology, which is the most important part of trading, in my opinion. And if you're someone who's been watching videos and you've been learning the technicals and you're still stuck, but you've been skipping past videos where trading psychology has a heavy emphasis, maybe that's the why, maybe that's the reason, that is the why, right, that you're struggling. So check out the article I did. I think it's called Why I Scare Traders Away. It talks about when I first signed up for my trading course, right? Paid $4,000 to take a training course. I'm all excited. And the first thing I got was a 90-page document on trading psychology, OODA loop theory, understanding myself, and all of that fun stuff. And at first, I was in the very same position as you guys, where it's like, this is a piece of junk. Just give me a strategy. But after failing for a pretty long period of time and making a significant amount of financial donations to the market, let's call it that, I went back to that original content and actually saw how powerful trading psychology is. So when you watch my videos, guys, just don't skip past the beginning messages. This one's a little bit of a waste, obviously, but most of the time we're talking about something that is very powerful and, in fact, more powerful than the actual chart work. So speaking of chart work, let's get into the charts. Today we're going to talk about a lot of patterns. Patterns are back, and they're back in a big way. Not that they ever left, but the recent market conditions, meaning the consolidative markets that we've had, and it's typically like this during the end of the year, the trading year is basically over, they have lent their way to a lot of advanced pattern formations. And over the last 2 weeks, they have been on fire. So it's certainly been the best time of the year to be a pattern trader. And for you guys that have followed me for a while, right, I haven't given up on patterns. Yes, there are other things that I emphasize from an educational standpoint. There are other strategies and tactics that I trade. And patterns may not be the center point, but it's still a strategy that I use, one of the many strategies that I use. And in times like this, in consolidation, they can come in handy. In fact, real quick, I just saw this. Where's it at? A message from Dennis over my last video. Amazing as always. I love these videos. I'm from the UTT at your old company. I've been doing some swing trading because of my work schedule, but recently I've noticed a lot of consolidation has been going on. So I dusted off my old pattern backtesting and have been trading them. It's great to have a way to trade the market. It's great to have a way to trade when the market does anything, up, down, sideways. 115 lost 4. I think I like it better during consolidation. I told you they're back. All right, let's dig into the charts. So as Dennis just mentioned, the markets have been in consolidation for a little bit now. It's a combination of a few things. It is that time of the year. We just had a holiday, the Thanksgiving holiday here in the US, and we're getting at that point where it's the end of the trading year. I just wrote an article about this as well, where how this is always the most important time of the year for me, because instead of worrying about trying to make up for lost profits, or instead of worrying about how to get to that next level of my money management in the last month of the year and really forcing something to happen, which usually ends bad, this is a time of year where trading takes a little bit of a back seat, and I focus on my continued education. So I dedicate about a month or 6 weeks to saying, okay, reviewing how my trading went this year, what can I fix, or what do I need to work on for next year? And there's a few things that are on my agenda, but I'm not the only one that feels that way. And you look at like big money managers out there, right? Typically they've had a solid year. If you have a solid year, you report to your clients that you had a solid year. Your clients kind of renew whatever their subscription, or they don't cancel it, and they continue to stay with you for next year. So the number one goal is don't do anything stupid that's going to scare people away at this point in time. And we see the market just kind of slow down. Now, a lot of people look at this consolidation as being a negative, but as Dennis mentioned, it could be a positive if you know how to trade it. And we've seen an abundance of pattern formations within here. So we're going to start here on the pound dollar daily. And this is essentially the same thing we've been looking at for the last few weeks, right? This is a consolidative pattern here, flag pattern, pennant pattern, that's just been going sideways. Now, there should be an eventual break. In this type of scenario, the eventual break should be more likely to the upside than the downside, but obviously we don't know until it actually happens. What we also don't know is how long is this going to occur until we break, right? We've been going for a little bit here, but if we take a look really quick at a similar trade, pound yen, we've been going on for a lot longer. So we never know when it's going to break. All we can do is go through our trading plan, go through our ritual, our routine, and prepare for how we want to handle it if it does. All right, sorry about that. Hit the wrong button, exited my recording, so let's get back to it. But you can see here as we go down to the lower time frames, what looks like a bunch of junk actually has a lot of pattern formations. We talked about this in the Bridging the Gap workshop, but we look at what has recently been done here on the pound dollar, right? Nice little cipher winner right there. We went sideways a little bit, nothing right there, but then recently, last week, had a nice little bat pattern winner if you front ran and you were able to get involved. And as we're setting up another double top and eventual move back across the channel, we actually have another potential advanced pattern formation setting up as well. This is going to be another bat pattern, right? If we take, delete this a little bit, if we take this initial move right here, this swing low to the swing high, this is what's going to be called our X to A leg. This is the starting point for any pattern formation that we trade, kind of like we call it an impulse leg or an anchor leg, but it's the first thing we want to identify. A lot of traders get into trouble because they identify things backwards. They find the pattern and then go back to fit the X leg or fit the retracements. No, we always want to go in order, right? For you guys that are on the platform, right? When we teach advanced pattern formations in the course, it starts with a checklist, right? Number one, find impulse or anchor leg. Okay, number two, right? If retracement comes to that, then this, then that. Hey buddy, I'm recording a video right now. One of the luxuries of working from home. You gotta ask mommy. Okay? Always sneaking in at the worst moments. Anyway, where's that? Anchor leg here, right? So then our next leg, right? After we have an anchor leg, we know that we can have a potential advanced pattern formation. We're looking for our first retracement. Our first retracement is going to be right here. And based on the level, the Fibonacci level that retracement comes to, that's going to tell us what pattern formation to be on alert for, whether it's going to be a bat, whether it's going to be a cipher, whether it's going to be a Gartley. And if you have the tool here, watch, this is pretty cool. Just kind of do this here. It'll actually kind of draw it out for you, right? We have our initial leg, and then as I work my way down, you can see this could be a bat or a cipher. I can't go below it, but well, I guess I can. Look at that. If we go lower, I know we can be in a butterfly, and in this middle, which is not letting me drag because there's no candle in here. There we go. Look at that. It could be a Gartley or a cipher. So depending on what that retracement comes to, that's going to let you know what pattern formation you have on your radar. And then, of course, you go to your little checklist. Okay, now I'm looking for bat. What needs to happen next? And it's this really simple if-then thought process. Just imagine like a dummy-proof flow chart, right? So now we have our C leg, our next retracement, right? And then if we continue lower down to this 886 Fibonacci retracement, that's going to give us a bullish bat pattern. So if price were to make its way across this channel once again and find some support at our previous lows, right? Our previous lows where we found support twice before, actually 3 times if you look left, we're going to have a bat pattern. And you can use this bat pattern in one of 2 ways, right? One, if you're simply a pattern trader, if you're like, Akil, I don't know what's going to happen. I just want to kind of a get in, get out approach, short move. Well, you can see all you're looking for targets is a quick move right back up to this 128.83 level. It's really not that far away, right? You can easily get this and boom, it's right at the middle of our previous level of support, which if broken will become resistance. That's exactly where you want to exit the market. But also, if you're someone that's looking at the bigger pattern formation right back on the daily and you're saying, hey, I like this as a flag pattern. I like this as a potential bullish break. What you can do is you can use this advanced pattern formation as an entry reason to set yourself up into that bigger trade. And what I mean by that is you can simply use this as an entry reason to set yourself up into the bigger trade. You can kind of go halfsies where you take half profit off at the traditional target, traditional pattern targets, and then hold another half of a position on for the breakout. However you want to choose it, right? That's the key. The key thing about trading is you want to fit it around what you want to do. There's no black or white. You have to do this. You have to do that. Once you know the skill, right, you can take those skills and you can kind of not manipulate it, but you can kind of mold it any way you want depending on you as a trader. And that's the easiest way to follow your rules is by adapting your trading style to your personality. So pound dollar bat pattern here. Potential bat pattern here on the 4-hour. Again, a lot of these markets are in consolidation. We're just waiting for them to happen. And what's cool is if this pattern loses, right, the last 2 before this one, it's still profitable. You go 2 out of 3 of pattern formations, you're going to make a lot of money, which is pretty cool. So let's move on to the next one. Speaking of patterns, very similar here on the pound yen. This one's just been in consolidation for a lot longer. Our chart's going to be a little bit slow because I have about 1,000 days of data loaded up and I need to kind of limit that a little bit. So give me some time here. Come on. Come on. It's funny, while we're waiting, I got a message the other day from someone that was with me when I first started trading. When I first started trading, I was only a pattern trader. Now, I still took into account structure and the basics of how price action moves, all that fun stuff. But because I was very undisciplined, patterns was the first strategy that I flocked to because, again, they were dummy proof. And I guess he had started watching my videos for the first time since, I think he said like 2014. And he said he was amazed at how much other stuff I'm doing. And it's just the natural evolution of a trader. And I think the misconception out there is that I threw patterns away. I do not use them. Maybe they don't work anymore. And that's not the case. I use them. I just use them as part of a bigger puzzle. And now, because I have a greater knowledge of what's happening on the price chart, I could use them in a slightly different way. So for some reason, this one doesn't want to load. This is being silly. I hope my kid didn't press any buttons and blow up anything. But let's go to our trading view charts. And we'll look at it over here. What did I say? Pound yen, right? So let's go to pound yen here. Pound yen, again, on the 4-hour. A much longer form of consolidation, right? Same sideways movement, but we've been going like this for what seems like forever, right? Look at our daily chart. Essentially, we started this consolidation back in October, about October 11th, right near my birthday, October 11th, 12th, somewhere around that area. We've been going sideways since. Now, very similar to the pound dollar, I've been expecting a bullish breakout from this, and we haven't technically gotten it yet, right? You can see this sneaky little level of resistance right here. I think it was Ale in our live room who identified this, that we need to pay attention to. So I'd love to see a violation of this level. And now that we've tested it, a violation of these highs right here before we can break to the upside. But if you notice down on the 4-hour chart, what we've started to do, right? And I don't know what's happening with my, give me a second. I lost my numbers over here. Everything is just falling apart here. The world is ending. There we go. If you notice here on the 4-hour chart, what's happening is that we're starting to consolidate near the top of the zone. So if I just were to draw it out for you, here's what's interesting, right? We have our consolidation. Boom. We know that for you guys that took the Foundation 2 course, we kind of judge our consolidation by the highs and the lows. What are the highs doing in comparison to the lows? Is one sloping? Are they both even? That's how we get little clues kind of determining which way we think we're going to break out. And you notice that we have this consolidation. The market's going sideways. And now we're starting a smaller consolidation at the upper part of this zone. And this is a signal to me that, you know, we can obviously just retrace here. And if that happens, we'll adjust for it. But this is a signal here for me that we're more likely to break out to the upside than the downside. So I'm not putting all my eggs in one basket. I'm not buying the trade right now. That's another misconception of technical analysis, that once you make a prediction, you have to buy it or sell it right away. No, we wait, right? We want to be predictive in our analysis, reactive in our execution. So I want to predict and prepare. I want to predict a bullish breakout. I want to prepare myself for how I want to take advantage of it. And then I want to wait for the market to actually give me a signal that says, hey, Akil, we are more likely to do this than that. And that's how I'm putting myself on the probable side in a consistent approach. So keep an eye out here on pound yen. Actually, that topic, the misconceptions of technical analysis, is going to be coming out this December on the Trading Coach podcast. We just did a live stream yesterday in the Facebook group, and that was one of the titles that got heavily voted on. So I'm excited to kind of share that with you as well on the Trading Coach podcast. You can catch it every Monday, Wednesday, and Friday on your favorite podcasting app. Life is short. Have fun. All right. Following with our theme of pattern formations, dollar Canada. Right? You guys can see it already. Right? Dollar Canada, we've just been in a funk. We've been consolidating. We have a nice little flag pattern here, nice little pennant pattern here, I should say. However, it's not at a location that I have any interest in because, again, we failed, or we haven't yet tested or violated our previous level of structure resistance. Therefore, I have no real reason to believe that we're more likely to go up versus down until that happens. So I'm asking myself what we can have in here. And there are two things. Again, during the week, very nice advanced pattern formation. You probably can't see it, but I'll draw it out for you. Dennis was not playing. These things have been killing it, right? Boom. Yeah, something like that. And let's say we break out to the downside here. Well, we're going to have another one setting up as well. We're looking at, again, this initial red line here. I'll make it a little bit thicker for you. This initial red line being my X to A. Boom. Fibonacci retracement from this swing low to swing high. Let's make sure that's on the right point. Should be. Nope. Oh, way off. There we go. X to A down here. Fibonacci retracement. We've come to a 50% retracement. Once again, 50% retracement is going to put me on alert for what type of pattern formation? Just talked about this. Potential bat pattern. And that's going to look like this. X to A to B, B to C, and then a C to D completion right down here at our 886. That's 132.06. That's right near the 132 even handle, right? Psychological number. And of course, looking left, that's right near our previous outside return, our previous level of structure. So again, taking the basics of just reading a price chart into account, if we look at the ebbs and flows that price action made here, right? This was our previous outside return before expanding up. And if we look left, right, we've seen the market test that level on numerous occasions. And here for resistance, 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 and here for resistance. On the other side for support, and then even back here for support as well. So a pretty decent level in the market. In fact, it looks like a 50% retracement, maybe a little bit short. Not that that makes any difference. It's still the pattern formation, but yeah, a little bit short of a, I guess the lows are here at a 50% retracement as well. So if you want some more Fibonacci influence, you're at a 50% retracement of the overall swing higher as well. But again, what matters most is the pattern. The pattern is the pattern. I personally trade them on their own, meaning I don't need any other type of confirmation for them. But this is a good example. If you are someone that's using them more in a CTS style, that's a combined technical scoring style, where you're adding up the different clues that the market gives you and trying to build your case for entry that way. Well, now you have a pattern formation, now you have Fibonacci confluence, now you have support and resistance, right? You're building a pretty decently scored setup. Another pattern, because again, patterns are back, right? They're in vogue right now. Let's go to Aussie Canada. This was another one that had a winner earlier in the week, or last week, I should say. Watch this. Boom. I wonder if Dennis caught this one. X to A, A to B, B to C, C to D, right down there. Still holding on for target twos, by the way, if you're taking target twos. I'm personally in a one in, one out mode this year. It's an adjustment I made halfway through the year because we haven't really seen the follow through in patterns, in trades in general, because of the lack of volatility in the market that I'm used to. I've taken a one in, one out approach with patterns. So I've taken everything off at the first target and then no longer holding for the second target. We'll see if that again gets changed next year. But once again, another pattern formation. This one's going to be a little bit different, right? We talked about starting in the beginning, right? X to A, our starting point, right? And then we go down our checklist, right? Look for that retracement. Where does that retracement come to? And based off of where that retracement comes to, that sets us up for what pattern we should be on alert for. So the previous ones we looked at came to the 50% retracement, which we knew were a bat pattern. This one comes past the 50% retracement and touches and actually goes beyond the 618. So in the rules for pattern formation, at least the way I trade them, right? If we touch the 618, then a bat pattern is invalid. So I take my bat pattern sheet, throw it away, and then I look on my sheet and say, okay, what happens if we hit the 618? And my little sheet says, if we hit the 618, then we're on alert for a potential Gartley pattern. So I know that a Gartley is what I want to look for. Look at that. Finally, this thing loaded up. I don't know, it took so long. So looking at a Gartley, let me just see real quick if I can load it up on here because this makes my life a lot easier. Oh, Aussie Canada, that is. Makes my life a lot easier for drawing it on here than doing it step by step. So let's zoom out. And we can draw it on, like we show you guys kind of the if-then thought process, right? Here's our X to A leg. And then our A to B as we're going down, this is nothing, 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 right? Nothing, nothing, nothing. Oh, as soon as we get here, could be a potential cipher, right? As soon as we get here, could be a potential cipher. Once we get to this 50% level, get back up there, here we go. Could be a potential cipher or a potential bat, right? So it's doing that if-then for us. And then once we get past that 618, which is down here, could still be a cipher, but not a bat, could still be a Gartley. And then when we end up breaking that level, now it can only be a Gartley. And I don't think we're going to hit... Yeah, we are. Okay, good. Boom. We hit our C requirement, and I know that a Gartley completion is going to put me down here for another potential buy. Now, what's interesting about this one, and again, overall, if we just bounce up to the daily real quick, this is another pair that's been in consolidation. I actually had a really big long-term outlook for this. If you guys have been following my videos weekly, this had to be during the summer. It might have been. I guess it had to be because this started back here. I actually had a really big longer-term outlook where I thought this thing was going to tank because everything in Australia is horrible. Canada was strong at the moment and go like a million pips lower. And then we just ended up going sideways. So that's, again, never got involved in that trade. But, again, it's a prediction that we make millions of predictions as traders. Only a handful of them actually come to fruition. But you can see something interesting about this one is because we have really close overlapping X legs or levels of structure near our X. This is our X leg right here. You can see our VS1 level, this nice green box, points out another level of structure right below it. If you're using your stops, I think I have this set to a 1 ATR stop, but if your stop is right here, this may be one of those scenarios where we talk about having a range of stops, right? Mine is between 1 and 2 ATR. This is one where it may be worth saying, hey, I'm going to open up my stop loss a little bit to like a 1.5 or a 2 and just give myself a little bit of safety, right? You're not going to avoid this lower level. There's no way you're going to maintain a 1-to-1 risk reward doing that. So you never want to put yourself in a position where the risk reward is not to your liking. But if you can get it in a little bit of a safer position and it's within your rules, I definitely think that's beneficial to do. So lastly, let's head over to oil. Oil was interesting. It's massive sell-off the last 2 days on oil, but that's not going to scare me away. And this is interesting, right? Because I've adapted the philosophy. I don't know if I want to call it philosophy or it's just based on my time in the market. But I guess even in life, I've adapted my philosophy of being the minority, right? Whether it's breaking out of your comfort zone, right? We know that if you guys have seen the comfort zone kind of infographic, 80% of people, if not more, stay in this comfortable place where they're okay with their job. They don't want to get anything better out of life. They don't want to take any risk. It's comfortable. They're going to live a moderate life until they eventually die. Nothing wrong with that. But for you guys that want more out of life, you have to get out of that comfort zone. You have to take risk, take chance. You got to be willing to do the opposite of what people think. And most of the time when that happens, you get people saying, no, don't do it. Where you're like, hey, I'm going to start a business. And they're like, well, isn't that hard? Don't businesses fail? Are you sure you want to do that? You have a really good job right now. Shouldn't you stay there? Right? They give you all these reasons not to do it and makes you feel like, well, maybe I am wrong. Right? And you're not wrong. You're just not the norm. And most of the time, from a psychological standpoint, most of the people will tell you no because they really want to do something, but they're afraid to do it themselves. And to pull you back down makes themselves feel better, because when you do something that you want to do, something that they want to do but they're scared of, it's kind of like a reality check, and it puts the pressure on them. Not to get too deep into the subject, but essentially being different isn't a negative. And if you think about trading is the same way. About 90% of traders fail, right? 90% of traders fail for various reasons. Not necessarily they're bad at making predictions, but they fail for many reasons. But a lot of the time, by the time you hear everyone agreeing on something, you should probably do the opposite. So you see big sell-offs like this, right? And you get a lot of people that are saying, oh, you got to sell it, you got to sell it, you got to sell it. Prices are going down, prices are going down. CNBC and Bloomberg start talking about it. Oil prices take a hit for the last 2 days. And then you go on and you're like, man, this is a good buying opportunity. And what's the first thing you hear? Don't catch the falling knife. Well, yeah. I think you should catch the falling knife, right? Because when everyone's selling, this is the perfect opportunity to look to buy. Now, obviously, it needs to be rules-based, but we have a very high momentum candle here. But look at the wicks at the end. They're showing us something. They're showing us something at a previous level of structure as well. They're showing us that there is some buying pressure down at this level, right? Not only was this high momentum candle stopped and retraced a little bit, not too much, right? But this next one tried to make a move lower and failed. What would be very interesting is if we had a higher high, higher close candle, right? One that engulfed this one, showing us that buying pressure is present in this area. And it wouldn't surprise me if we made up for all of this, right? Now, I wouldn't necessarily take targets at the very highs right here, but I would certainly look for a move back to a very conservative level right here, 56.58s, a more conservative level, maybe 57.23s, and certainly right up here around 58 flat, I believe it is. Yeah, 58 flat for price targets. And if you have any fear about what happened, about what's happening, just look at the past. What do we do here? Sell off, V. Sell off, V, right? This is what the market does, right? So this is a prime location, in my opinion, if you're interested in being a buyer, to look to get involved in the market, right? Your stop loss is going to be very minimum, right? Below these lows right here. And again, you can look for targets all the way back up to, 58 flat, and maybe even further up if that, since we've been in this upward channel. So that's a little bit on oil as well. So hopefully you guys enjoyed this video. If you did, do me a favor. Again, hit that like button, subscribe if you're new. Leave me a comment letting me know what you think. Excited to be back in the markets this week, non-farm week. We got Bank of Canada rate statements, so a few fundamentals in the week. Tier 1 traders, we'll talk about that in the live room as the week goes on. And I hope you guys enjoy the rest of your weekend. Until next time, plan your trade. Trade your plan. If you want links to the article I talked about, it's in the description box below. And of course, make sure you check out the Trading Coach podcast by myself and Always Free by Jason Greystone. All right, take care.